question we get a lot about whole life insurance is, can I just make a one-time payment to my policy? We get this a lot with individuals that have a lot of cash in their bank account, and they're attracted to a whole life insurance for the cash value. They like the safety, the fact that they can access the cash value, like their own personal line of credit, and then also the tax benefits are very attractive to them. But what they're not attracted to is the idea of having to make premium payments for a long period of time. They're usually used to making investments, whether they're buying property or throwing money in the stock market. They're used to just writing a check, making the purchase or making the investment, and that's it. When it comes to payments, they just don't like it and they don't want it. So back to the question, can I make a one-time payment to a whole life insurance policy? The answer to the question is yes, but it does not always make sense. Take an example of $100,000. I've got 100 grand, I'm interested in a whole life insurance policy, and I ask, Steve, can I just write you a check for 100 grand and be done with it? My answer would be, yes, you could do that, but I wouldn't recommend doing it that way. The reason why is if you look at this example, we've got a $100,000 payment, one time going into the policy. How's the cash value look? Yeah, not that good at all, does it? But here's the same policy with the same $100,000 going in, but what do you notice? We broke that $100,000 up over 4 years. You've got 4 equal payments of $25,000. Which one gives you more cash value? The $25,000 for 4 years. You've got significantly more cash value from start to finish in that example. So when someone wants to write a check, just a one-time check for 100 grand like we see in this scenario, there's really 2 options available. One, they can write a check for 100 grand and they can get that 4-year fund example, the $25K per year for 4 years. How that works is when you write the check for $100,000, you send it to the insurance company and you can elect to have the money placed in a holdings account. This is called a premium deposit account. It's a lot like a certificate of deposit, a CD, where you park money, it earns interest, and for the next 4 years, the insurance company is going to move $25,000 with interest into your policy. So it's a nice place to park money where you can earn a rate of return and have it feed the life insurance policy. Attractive on the surface. The drawback to that is that when your money is in that premium deposit account, the holding account, you can't access it until it's moved into the policy. So each year, as more money is moved into the policy, you've got more and more of your 100 grand available. But for someone that wants access to that $100,000, they're typically not going to go that route, because if I go with option 2, which is me saying, okay, I want to move my $100,000 into the policy. I see that 4 payments of $25,000 gives me the most money from start to finish, and I don't have to pay another penny into the policy after that. What I'll do is just write a check or just send the funds direct deposit to the insurance company from my bank account over the next 4 years. Very simple. That keeps the funds liquid in your bank account. So simply put, all I'm doing is taking the 100 grand, year 1, I move 25 grand into the policy. I've got 75 grand in my bank account. I've got cash value in the policy. That's what's liquid to me, because money in the bank is liquid. So if that liquidity is very important to me, I would go with option 2. And that's what most people do when it comes to making a one-time payment. We look at that option, but then after seeing how to really get the most value out of your policy, we decide to break it up over 4 payments. And sometimes it's 3 payments, sometimes it's 5 payments. It does depend on your age. I hope that did make sense, and I hope this video was helpful. If you'd like to see a video where I talk about how to maximize a one-time payment, I would check out this video here.